So these are like very small problems, okay, we could handle here. A non-current asset was purchased at the beginning of year 1 for 2400 and depreciated by 20% per annum using the reducing balance method. At the beginning of 4 year, it was sold for 1200. What is the profit or loss on disposal? Okay, so if we have the small working here, okay, that will help us a lot. That will help us a lot. See, he's not asking for ledger or anything. They're just asking you what would be the profit. Okay, so we'll start here. See, the machine was purchased for how much? 2400. The depreciation we don't know. Okay, the sale value we know. So now we have to find out some missing number. The only missing number is depreciation. So you can just like work out right roughly also. Okay, so we'll start. See, year one. So machine value or NCA value. So at the first time it was 2400, right? Or we'll have another column. Year one opening value. Okay, NCA value is 2400. We have to find out the year, this value. So we have to provide depreciation. So depreciation, if you take, so depreciation if you take, it would be 20% of the opening number. Okay, 20% of the opening number. So this is the depreciation. Okay, and this is the closing value. So opening value minus this number. Okay, see, we have to do the same thing again and again. Okay, we have to do it again and again. So what happens is, so again we have to do it for year 2 and year 3. So year 2 opening value would be the same number. Okay, because the closing and the same would be the same number, but we just have to provide the depreciation. Okay, so we can take this, we can put it here, and if you see, of this 20% is a depreciation. Okay, and from here it is depreciation is deducted. Okay, so year 2 we have done, we'll do for year 3. So year 3 is similar. From the opening we have deducted 20%, depreciation is 20%, and value is 1228. See, it was sold at the beginning of year 4. Beginning of year 4 and ending of year 3 are same. Okay, so he just wants to confuse you, that's why he has given like that. We want to have the total depreciation. Okay, we want to have the total depreciation. See, total depreciation, if you take this number, okay, there's one depreciation here, another depreciation here, and one more depreciation here. Okay, so this is the total depreciation. So the asset value is 11228. So this is the carrying value. Okay, so this carrying value has sold for 1200. So 28.8 is the loss on disposal. Okay, now see, it's for teaching purpose I'm teaching like this, but if you do a lot of sums, you can also develop like shortcut methods. For example, this is the value of the machine on year 4. Here itself you can put the sale value. Okay, here itself you could quickly do the sale value, and you can easily get the profit here. Okay, or the profit or the loss, you can easily get it. Okay, so it's only up to you. If you do a lot of sums, you will get a good idea. We'll move on to the next sum. So here he's saying a business's NCA had a carrying amount of 1,25,000 An asset which had cost 12,000 was sold. Okay, not the entire thing. Only a 12,000 worth the cost of asset was sold for 9,000 and at a profit of 2,000. What is the revised carrying amount? Okay, so he says, see, the carrying amount refers to the cost of the asset minus the depreciation is the carrying amount. Okay, so we should know like what is the total uh, asset worth, okay, after depreciation which is gone. So we'll put it like this. So first we'll see like what is carrying value, then you will get a better idea. So carrying value refers to original value minus accumulated depreciation or the total depreciation till now. Okay, so that is the formula. So he says that, okay, the carrying value of that asset is 1,25,000. What is its worth now after the sale of asset? What is its worth now? Okay, so this is before sale carrying value, and we have to find out after sale carrying value. Okay, two things we have to find. So first we'll find out the carrying value. Okay, so the cost is given. So I think we could use our previous format itself, so it would be like quite easy. Okay, so look at here, what he wants is this. Okay, so this is the number that he is like he wants. Okay, so what are the numbers which are he is given is, he is given that the cost of the machine is 12,000. Okay, it was sold for 9,000 and they have made a profit on sale of 2,000. Okay, they have made a profit on sale of 2,000. Now it's like reverse working. Okay, look at here, we don't know the carrying value. Okay, and we don't know the depreciation. What we want is the carrying value. See, 12,000 rupees worth of machine. Okay, after depreciation we don't know what it is, but the profit that we made on that sale is 2,000. Okay, the sale value is 9,000. So what should it be its worth? Okay, its worth should be 7,000. Its worth should be 7,000. 7,000 worth of an asset, okay, is sold for 9,000. So we have made a profit of 2,000. So the carrying value of that machine, okay, was 7,000. So we can take this number. Okay, so the carrying value of the sold machine is 7,000. Okay, this 7,000 has been moved out. Okay, so how much would be left? The left would be 118. Okay, so again these are like trick kind of questions, so you have to know like how the numbers work properly, then only you can do this tricky kind of questions. So we'll move on to the next one. Okay, so here he says the carrying amount of a company's non-current asset was 2 lakhs at 1st August 2010. During the year ended 31st July 2011, the company sold non-current asset for 25,000, on which it made a loss of 5,000. The depreciation charge for the year was 20,000. What was the carrying amount of non-current asset at 31st July 2001? Okay, so he's asking the closing value of the asset. Okay, I think it's like very similar to what we did here. So we'll copy that and we'll see what would be the answer. So we can have the numbers. Okay, let's insert the numbers. The carrying amount of a company's non-current asset, okay, was 2 lakhs. So totally it is 2 lakhs at 1st July. So that's the opening date. During the year, the company sold a non-current asset for 25,000. So they have sold something for 25,000. That's the income. On which it made a loss of 5,000. So they have made a loss of 5,000. Okay, loss was 5,000. The depreciation for the year, okay, the depreciation for the year was 20,000. Okay, so this is something new that still now we have not seen this. So the depreciation, see, normally only when we deduct the depreciation, we get the carrying value, right? So the asset can be maintained at original value or carrying value. So the depreciation is 20,000. Now what would be the carrying value of the sold asset? Okay, see, some asset has been sold for 25,000, okay, and they have incurred a loss of 5,000. So the asset price would have been 30,000 and it has been sold for 25,000, thereby incurring a loss of 5,000. So this is what the asset that has been sold. So 30,000 worth of asset has been sold. So the total worth value would be like this. Okay, 1,50,000 would be the value. Let's see whether we have the value. No, but this should be the answer. Okay, 1,50,000. So we'll move on to the next question. So the next question is, on 1st February 2018, Monaco owned NCA with a carrying amount of 6,97,680. During the year ended 31st January 2019, the following occurred. Okay, so their opening value is this. Okay, let's see what happens. Land with carrying amount of 3,50,000 was revalued to 4,25,000. So the value of it is increasing. An asset with a carrying amount of 40,000 was disposed of for 30,000. Okay, we are not worried about at what price it was sold. Okay, how much of carrying value of amount has been gone out or have been increased. That's what we are bothered about. So 40,000 is gone. Depreciation of 82,400 was charged to the SOPL. Okay, so that we have to deduct. The carrying amount of non-current asset at 31st January 2019 was 7,20,000. So he has given the closing amount. Now what he is asking is, what amount should be shown for the purchase of non-current asset in the statement of cash flows? Okay, so this is a different sum, but again and again it's the same format. Okay, so we'll start from here. We'll insert the numbers, we'll get the answer. So we'll start. See, so the opening carrying value, okay, we can't put it before sale, after sale. We'll put it as opening carrying value, and we will have it as closing carrying value. Okay, so just one second. So we'll start. So land has been revalued. So the value of assets would go up. Okay, so by how much it will go up? It will go up by the difference. So the difference is 4,25,000 minus 3,50,000. Okay, and the opening value was 697,680, and there has been an asset sold. Okay, So we can put it like this. The carrying value of machine sold was 40,000. So 40,000 worth of asset has been sold. Depreciation has been like given. So depreciation is 82,400, and the closing value has also been given. So it is 7,20,490. Okay. The balancing figure here. Okay, the balancing figure here is should be the asset purchased. Okay, that should be the asset purchased. So what we'll do, first we'll try to add all these elements. That will definitely be lower than the closing value. Yes, it will be it will be lesser than the closing value because they have purchased as an asset and they have told it. So how much should it be? Its worth is 70,210. Okay. Here it is given as 767. So this should be the answer. I don't know why the answer has been like shown like that. Okay, because this is the answer here. So in this problem, we don't have need for this workings, so we can remove them. So this is about the problem here. So we'll move on to the next sum. So the next sum here is B acquired a lorry on 1st May 2010 at a cost of 3 lakhs. The lorry has an estimated useful life of 4 years and an estimated resale value at the end of that time of 6,000. B charges depreciation on straight line basis with a proportionate charge in the period of acquisition. What will be the depreciation charge for the lorry B in accounting period to what will be the depreciation charge for the lorry B in B's accounting period to 30 December 2010. So we'll start. So I think it's a small problem only. Okay. So the machine was purchased on 1st May at 30,000. Life is 4 years. So we have to first find out the depreciation per annum. So once we find out that, then we can proportionately charge. So we can start. So we did this sum, I think, in the earlier part. So it works like this. The cost of the asset is 30,000 and the scrap value is 6,000 and the life of the asset is 4. So let's get the answer. Okay. Okay, sorry, I think it's 30,000. Okay, so it comes to 6,000. The depreciation per annum is 6,000. So how many months of depreciation is there? So it was acquired on May. So from May, June, July, August, and September. So 5 months depreciation we have to provide. Okay, so depreciation for 5 months equals to, so this 6,000 into, for 5 months we have to find out. So we'll start. Okay, that comes to 2500. So this is again a simple sum. So the way they give the sum is like tricky. So we'll go to the next one. At 30 September 2012, the following balances existed in the records of Lambda Co. So the plant and equipment, okay, the cost of it is this. I think it's the original cost. This is the accumulated depreciation during the year ended 30th September 2003. Okay, that's like 1 year later. A plant with a written down value of 37,000 was sold for 49,000. The plant had originally cost 80,000. Okay, so this is its carrying value. This is its sold value. So the difference between this is the profit. The original cost of it is 80,000. The plant purchased during the year was 1,80,000. So they have purchased another plant. It is Lambda's course policy to charge a full year's depreciation in the year of acquisition of an asset and none in the year of sale, using a rate of 10% straight line basis. What is a carrying value that should appear in Lambda's statement of financial position for the plant and equipment? So we'll start to work out. So the opening, okay, the opening original value is 8,62,000 and the accumulated depreciation is this value, right? So we would get the okay, so now we'll take the adjustments here. So first one, so the first one is there is an asset that has been sold. Okay, there is an asset that has been sold and the asset that has been sold is, okay, we'll asset sold has a carrying value of 80,000, so that we have to remove. And the depreciation on asset sold, okay, the depreciation on that asset sold, okay, was the difference between 80 and 37. Okay, so that is what it was like originally 80,000 and it has its carrying value now is 37. So the difference between two of these is the depreciation which is there. So 43,000 is the depreciation, and there was an asset which has been purchased. So asset purchased, and that is worth 1,80,000. And thereafter he says it is a company's policy to charge a full year's depreciation in the year of acquisition. So whenever we purchase, we have to take a depreciation. So depreciation on new plant, so it's 10%. So it would be like 1,80,000 into 10%. Okay, so this depreciation has to be removed and this depreciation has to be added. So this is the opening depreciation. So we'll try to get the closing. Okay, so the closing original value is 9,60,000 and the closing accumulated depreciation we have to calculate. So that seems to be 3,72,000. So now normally what happens is the closing original value, okay, from that we have to deduct the accumulated depreciation we have to deduct. So then only we'll get the closing carrying value we'll get. So that value would be 5,88,000. Okay, so have we missed anything here? We just have to check. Okay, so this is this should be the carrying value. Carrying value should be uh, the closing original value, okay, minus the accumulated depreciation. So I think accumulated depreciation is 9,60,000 minus 3,72,000. So that should be the answer. But answer comes to 5,88,000, and what they have given is like 5,10,000. I think what we have worked out is like perfect. Okay, we have taken all the numbers and we have adjusted all the numbers. And this should be the answer. Okay, I think this should be the answer. The answer which I have given here might be wrong. Okay, so why I think what we have missed, see what we have missed is the additional depreciation. I think the depreciation for the existing machines, okay, that we have missed. So we will just put it here. So depreciation for current machines, okay, the machines that have been held till now, that I think we have not calculated. So if you see, we have to calculate 10% of 8,60,000 is the opening machines. 80,000 has been sold, so for that we can't provide depreciation. Okay, but for the existing machines we could provide. So that we have to work out. So let's work out and let's see how much that number comes to. Okay, that comes to 78. So that has to be added. So that comes to 4,50,000. So let's reduce it and we got the answer. Okay, so see, the mistakes can happen anywhere. Okay, because like what happened is the information we have worked out, but the existing machine depreciation has not been explicitly given here, so we have to infer it and then we have to get the answer here. Okay, so that's about this question. Okay, so thank you very much for watching this video. We'll meet in the next video.